Hi, this is Cary with Wicked Stocks, bringing you another video analysis. This one recorded Monday, May 17th, 2021 on ArcelorMittal, symbol MT. If you're not familiar with ArcelorMittal, they are a Luxembourg multinational steel manufacturing corporation headquartered in Luxembourg City. They were formed in 2006 from the takeover and merger of Arcelor by Indian-owned Mittal Steel. ArcelorMittal is the world's largest steel producer with an annual crude steel production of 92.5 million metric tons as of 2018, and they are ranked 120th in the 2019 Fortune Global 500 ranking of the world's largest corporations. They are heavily involved in steel. Obviously, there is a steel shortage occurring globally right now as GDPs pick up throughout the world following the COVID crisis. And so we have an economic expansion that is now playing out that is supposed to be, as far as the steel production is concerned, this pinch, if you will, is supposed to last for the next year or so before it tapers off and production ramps up. Wicked Stocks offers two forms of membership, free and premium. Free membership is exactly as it sounds. For no cost or obligation, you will receive one free stock video analysis a week, typically released on Mondays. And if you provide your name and email address, you'll receive an email from us each and every time a new free weekly video is ready for viewing. The second form of membership is premium and provides at least two stock videos every week and costs $24.95 a month. Just click on the premium membership link, fill out your payment information through our safe gateway portal, and you'll receive an email each and every time a new premium video is ready for viewing. Cancellation is allowed at any time. In full force. And you can see this stock here trading. I'm going to show you, obviously you can see the full scope of this stock from its evidently its late 90s origin as an IPO. You can see the extremes here. 314.31 was a 2008 high, and then it came crashing back to the most recent lows over the last 5 years, below $10. We're right back into the low 30s as we speak. 32.50 is the last trade. I'm going to zoom in on this area here because what I'm seeing is a significant overhead area of resistance. We open up into the weekly chart, and you can see a channel structure here at 35.77 this week. The week of Monday, May 17th, drops to 35.73 a full 4 weeks later, dropping a penny a week. You can actually determine the exact location of this channel top all the way through the rest of the year if you so choose, but just by subtracting these numbers out, divided by 4, or just subtract a penny a week. 35.77, that formation can absorb annual buying pressures. This channel formation goes back 5-6 years of activity, and so it is an annual containment structure. We can top out here for the year and from here fall back into the mid-20s over the next few months. I'm going to show you that in a moment. But really, you're queuing off of 35.77 or wherever that formation is. If you're long this stock, I would seriously considering unloading some of it in that vicinity. Or if you're just a short-term trader, by short-term I'm talking day trader, 3 to 5 day swing trader, 2 to 3 week trader. This is a weekly chart. At 35.77, we can top out not only for the year, but of course, on a weekly basis, on a monthly basis. This is an area to sell stock, buy puts, sell calls, whatever the case might be, however it is that you finagle your way into a short position. Once this area is tested, it can fall back into the mid-20s, mid to upper 20s. I'm going to show you that in a moment. But what I also really like while I'm showing you this chart is to show you the ramifications of a buy signal above it. And by buy signal, I mean because of the long-term scope of this formation, a 1% settlement or higher beyond it. So if we, at the end of this week, I don't see that happening because it's not a 10% rally from where we are now. It's under 10%, but not far off that mark. So over the next few weeks, let's say, if we happen to settle above this formation, we need to do so by at least a 1% margin. So if it were this week, it would be 36.13 or higher at the end of a week. You can play it off of a daily chart, by the way. And so even if we had a daily settlement at 36.13 or higher, that would be an initial tentative buy signal that you can act on. But I like to scale into long positions and short positions. So I'd say maybe you buy half on a daily settlement and buy the balance on a weekly settlement at 36.13 or higher, or whatever is the 1% push through this formation. And then I think you've got a real a signal for longer term bullish continuation. I'm going to zoom back on this chart, still a weekly bar chart. You can see over the last, 14, 15 years of activity, there's the exact same formation this week, or I'm sorry, the week of June 14th at 35.73. And so one of the things that I use as a targeting mechanism, as an objective, is the full channel extension. It's pretty well defined, and I think that would take probably a year or so to achieve. In other words, if we closed above that 35.73 channel top by a 1% margin or higher, then I think we've got another $30 a share to continue onward and upward. That would be the price target that I'd be looking at long term. Now, I could come up with nearer term targets as well, but the purpose of this video at this particular time is just sort of the big picture analysis for ArcelorMittal. And so closing above that 35.73 formation, expect another $30 rally to the upside over the next, I'm going to say 12 to 18 months. And that's just a target. That's not really a sellable resistance area. That would come with pushing through that 65 area onto 88.80 or wherever that formation is, and that is your ultra long-term resistance. And so, dare I say that closing any week above that 35.73 formation, we actually may get a 100+% return on that trade over the following several years. I do think that that is in the cards, if you will, following a weekly settlement above 35.73, that formation by a 1% margin. Yes, we've got a 12 to 18 month target in the mid 60s, but I think ultimately, 12 to 18 months perhaps, 2 to 3 years or so, I'm going to put it that way, somewhere in that long-term time frame, this stock can certainly push on into the 80s, upper 80s at this point, dropping ever so gradually. I give you the numbers here. You can subtract those out, divide by 4, and you'll know where that long-term channel top is each and every week as we continue through the rest of the year and well into next. So bottom line with this image, as you can see, significant overhead resistance in the 35.73 or the 35.70s, able to contain annual buying pressures. From here, we can fall back, but if we close above it, this is a very actionable buy signal that should yield, I'm thinking over the following year, at least the mid-60s, and the next several years, the mid to upper 80s. Now, downside, holding below this 35.77 formation, or once tested, however you want to frame it, does allow the market to retrace back to what I'm going to call midterm support. Presently at 25.16, the week of Monday, May 17th, rises to 26.38 a full month later, full 4 weeks later. 26.38 is Monday, June 14th. This is an ascending 1/3 speed line that I've used. There's also an ascending 2/3 speed line I'm not even bothering with here because it's so far off the mark. But the rising 1/3 speed line is a trend-defining tool. In other words, from the COVID low of 2020, this trend remains technically intact. Despite the fact that there's an overhead ceiling just waiting to be tested at 35.77. So you can be an aggressive buyer on downside pullbacks at 25.16 this week, and we're not going to see that this week. But if over the coming weeks this market eases back and sells off a bit into the mid to upper 20s, now you can ascertain the location of the speed line through time. And as long as this recent high is in at 33.13, this is a valid speed line to buy into. You also have, coupled with that, a rising channel bottom that is in the same vicinity. But I'm relying on the speed line as our trend-defining support. And so that 25.16 area, or wherever the speed line is at the time, if tested, can contain at least monthly, possibly quarterly selling pressures. And from there, the market can rally back into the mid-30s over the following several months. Closing below the 2516 speed line would indicate a good annual high, and I would expect the market to continue collapsing southward. Now, I would say that global steel production would become more satisfactory, more meeting demand, supply increasing under the scenario of closing below 2516. Inversely, closing above 35.77, I would say that global steel production is not keeping up with the growing demand, and we get into increasing supply pinches whereby we reach once again into the mid-60s at least over the following year or so, and perhaps into the mid to upper 80s over the following several years. And I have read some articles where this steel pinch, this supply issue, may last for several years. Others are saying no more than 6 to 12 months. Obviously, it depends on demand as well as the production. Anyway, I think I've said enough here, and that's all I'm going to say for this particular Wicked Stocks video on ArcelorMittal.